Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Mangalam. Guys, hi, good morning. And I think after 2 weeks of holiday shortened weeks, this is a full one.
Yes, sir. So it's the start of a new week and the end of the streak of shortened weeks that we had gotten. And this one's a heavy week. We have a bunch of earnings reactions this morning. Then you have HUL, I remember Tata Consumer, end the week with Reliance earnings on 25th.
And you've got HCL Tech Mahindra. I think about 6-7 nifty earnings which report, and then you've got the expiry as well, and lots to track. We'll be at the mercy of Trump and tariff announcements and the negotiations.
It's a nice dress, Reema. You're looking nice.
Thank you. Green is the color?
Green is the
color.
Green
is the color.
Green is indeed the color.
I mean, I think, it's looking better. It's looking better despite, disappointments from Infosys and otherwise, generally the environment, apart from Infosys, ex-Infosys, even if you take out some of the other results which came post-market hours on Friday and over the weekend, it's not looking all that bad. So, well, let's just get to it. And of course, we'll take it from the top in terms of global, where we left off, etc. So where we left off was a very good week. So it was a very short week, but it was a punchy one. 3-day week, last one, right? Monday was shut, Friday markets were shut. And look at the change, 4.5 on the Nifty, 6.5 on the Nifty Bank, and the small and the mid-cap indices up 4.5% apiece. So this is, a very, very good way. And by the way, this is the second week that the markets have done recovery in a very strong fashion. So let's take it forward. We have over the weekend data which shows the first estimate of the impact of the US trade war. This is data from an organization which contains container bookings around the world, and they track about 65% of all container which moves on seas across the world. And this is what it shows. This is April first week compared to last week of March. US imports coming into the US are down 64%. US exports are down 30%. Now, just one caveat, because the 2nd April the tariffs were coming in, and that was the pronounced date when Trump would have announced tariffs. A lot of exporters and importers would have sent in and sent out their stuff to beat that deadline. And this data most likely would be marred because of that. But even if you adjust for that, these are very large drops that we're talking about. And we'll look at this closely. Of course, this is the first week of April, and we'll get more as we go along. This week, you get the April flash PMI numbers, which I think will be also a very good first read on global impact of Trump tariffs. Consensus expectation, I looked at some numbers. They're expecting a small down, but nothing very large. But I think markets will be sensitive to this. World Bank, IMF spring meetings. This is only important, it happens every year, but this is important essentially because leaders will gather and, maybe some commentary around the impact of Trump tariffs. So that headline risk is there. G20 finance ministers and central bank governors meeting April 23rd to April 24th. Again, for the same reason. Heavy earnings, 34% of S&P 500 will report in the coming week, this week, basically. Macro markets are all steady. The 10-year $4.3 index near 100. Oil has bounced back from about 60 to 68. We are about 68 now. As of Friday's close and over the weekend as well. The one commodity which has done phenomenally well is gold. Gold is up 7% since the 8th of April, which is when the tariffs were paused. And if you look at broker after broker, everybody is basically bumped up their estimates of where they see gold by the end of the year. By the way, this is the best start. As of today, this is the best start gold has had in any year going back to the 1970s. Basically, January to April, you go back, and this is the best start to any year since the 1970s. So, super one there. Just India, and of course, the trade negotiations, I think a lot of focus will be there. So, India's trade team, led by the chief negotiator, Rajesh Agarwal, will visit the US this week. And they're going to be speaking to their American counterparts for 3 days starting the 23rd of April. Remember, this is not to hammer out a deal straight away. This is to kind of agree to the outlines of the various things that negotiations will touch upon. So this is kind of, a prelude to the actual negotiations which will happen. I mean, the timeline which has been given to us is that we'll probably get to hear something in terms of a bilateral deal. This is not the tariffs per se, which Trump has announced and has paused now, but this is a trade deal between US and India by fall of this year. That essentially has been the guidance. And of course, I mean, that FTA between India and UK, we reported source-based information that is moving towards the final stages. So with having said all of that, let me quickly put out the levels. Nifty on Thursday retested the March highs of 23,869, but we did not close above it. So that becomes the first kind of starting point. The next resistance comes in at 23,960 and then 24,551. 24,551 is a number we put out earlier as well. It's the 61.8% retracement of the full fall that we've had. Support for the Nifty, 20-hourly average, 23,460, and then the 40-hourly exponential, which is 23,225. Bank Nifty is almost back to its all-time high, which is 54,467. That's the first level to take out. But then now you got above all-time highs, you got to use extensions. And here, upside levels are 44,474 and 54,474 and then 56,631. So these are the two levels, and support for the Nifty Bank comes in at 53,095. Again, 20-hourly and the 40-hourly exponential, which is 52,369. I mean, the mood is generally quite all right. Lots of Asian markets are still shut because of the Easter weekend, but the mood generally is not all that bad at all, despite that infy miss that we had. 18 points lower is what you have on the GIFT Nifty.
Indeed, the bulls have regained control on Dalal Street. We ended higher for the second consecutive week, and we've also recouped all our tariff-related losses by closing above the March swing high. Not closing, but by moving above the March swing high, but not closing above it. But let's straight away get to the cues for the week. In terms of corporate earnings, on the IT side, you've got HCL Tech and Tech Mahindra. In terms of consumer names, it's HUL and Tata Consumer. You've got an Axis Bank and SBI Life in the financials, and Maruti in the auto pack. And globally, all eyes will be on Tesla. Tesla, remember, has down 36% YTD. And globally, Tesla and Alphabet will be on investors' radar. Back home, you've got the monthly April expiry on Thursday. And not to forget, US Vice President J.D. Vance will be visiting with his family India today. It's more of a cultural trip, but it's still the first American Vice President to visit India in 12 years. And there is that dinner with Prime Minister Modi. Wall Street on Thursday had a bit of a choppy session. The big story was United Health, which plummeted 22-23%. And that has about a 9-10% weightage on the Dow. So Dow closed down with a cut of more than 1%. US President, by the way, we're not bereft of any drama over the weekend. US President stepped up his attacks on Federal Reserve Jerome Powell. He posted on Truth Social, and that quote is up for you on your screen. Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another typical complete mess. Powell's termination cannot come fast enough. In terms of flows, the FIs bought in the cash for the third consecutive day on Thursday. They bought about 4,668 crore. Stocks to watch, well, three of them, top of mind, Infosys, HDFC Bank and ICICI Bank. Infosys ADR closed with a gain of about 2.5%, but in after-hours trade, it was up more than about 2%. And, Infosys, through FY25, kept raising their guidance. Thrice they raised it. They started the year with 1 to 3%. They kept raising it, finally made it 4.5 to 5%. But ultimately, given the way the year ended, FY25, they couldn't hold on to it. So that's the story for Infi's guidance.
That's the story for Infi's guidance. Let's see whether, you guys are talking about India doing extremely well. In the times of uncertainty, there's just gold and India, both of them doing extremely well. So if you just take a look at the way the markets are poised right now. On Thursday itself, the Indian indices did extremely well. The Nifty went back to that 23,850 mark. The Nifty Bank went within 60 points of a fresh record high. The mid-cap index at an index level was underperforming by gaining just about 0.2%, but by and large has been doing extremely well. The important part is whether this outperformance continues or not, because Nifty is now up 2,100 points from tariff level lows of 21,745 odd itself. And if you look at India versus the world, in the last 1 week, versus the last 1 month, India is the only index which has done extremely well. The last 1 month, Nifty is up around 2.15%, an outperformance of anywhere between 6 to 10% versus Nikkei, Hang Seng, Dow Jones and Nasdaq. Last 1 week itself, the Nifty was up 4.5%, as was the sensex. The Nikkei was the only major global index which was in the green. The others, all of them in the red. So India has clearly been shining, has been doing extremely well, and a large part of that has to do with our domestic-facing names. Now the problem is that the Nifty is around these congestion zones. 23,800 to 23,900 is where the Nifty's high was on Feb 5th, March 25th and April 17th as well. Can we be third time lucky? The answer to that will depend on a couple of things. One, on the way up, we have the 200-day moving average on the Nifty. Do we conquer that? And secondly, can the Nifty Bank lead this rally once again? The Nifty Bank likely to hit a fresh record high today, went within 60 points distance from a record high on Thursday. And the answer to where the Nifty Bank goes on to the result reaction that we will see from both HDFC Bank as well as ICICI Bank. From a flows standpoint, all things are pointing in the up direction. Why is that? Because in the cash market, FIs buy for 3 days in a row. In index futures as well, they've been covering their short positions over the last 5 to 6 trading sessions. If you look at it, we started April 9th with about 22% long exposure. Now that's gone up all the way up to 30%. Shorts coming by lower by almost 40,000 contracts. And levels that we're looking at lower levels, we have strong support at 23,650 thereabouts, because the 23,800 put is very active. 23,850 call tells you that maybe at around that 200-day moving average mark, we might see a little bit of supply. But if that were to hold on, then there are positions for this expiry which are expecting the Nifty to go all the way up to 24,250, 24,300 thereabouts itself. Put call ratio is at 1.16. Remember, nearly 1.2 is where we see the market being a little overbought. Even though we've rallied, we're a slight distance away from being overbought. And a couple of stocks that I'm watching out for today. We have Angel One, which has entered F&O ban after the result-related move. And we have Birlasoft, which is out of F&O ban. So those are a couple of counters I'll be watching out for today.
Thank you very much for that. Let's get to the equity calls then. Sayan Mukherjee of Nomura expects the Nifty to trade in a range of 17 to 20 times 1-year forward earnings multiples. They say they reset the March 2026 Nifty target to 24,970, which is based on a 9.5 times FY27 estimated Nifty EPS of 1280. After factoring in a 5% cut to current consensus estimates, he says they raised the target valuation multiple from 18.5 times to 19.5 times to factor in the drop in yields, assuming no material increase in risk premium. Science says in case of a stable risk environment, they expect FII flows to be supportive after the intense sell-off over the last 6 months. He says their portfolio stance is selective with a preference for domestic businesses.